Consultants just finished its second year of operations. The company's unadjusted trial balance at October 31st is as follows. This is a bit of a copying error. That's okay. Rainmaker prepares adjustments each October 31st. The following additional information is available on October 31st, 2017. So it's determined that $12,000 of the unearned consulting revenue had not been earned. So what is our unearned revenue currently in our trial balance? 26,000. Where are we at? Unearned consulting revenue, 26,000. They're saying that it was determined that 12,000 had not been earned. So this should now be 12,000. So what do we need to do to make that 12,000? What's that? Yeah, so this is a credit balance, which should be 12,000. So to get there, if we had our T-chart, currently it's at 26,000. They're telling us it's at 12,000. So what do we need to do? And what will we credit? Consulting revenue. Perfect. Unearned consulting revenue. So we're converting 12,000. Pardon me, 14,000 of our liabilities to our revenues to show that we've done the work. It was discovered that 14,000 of the balance in the consulting revenue was for services to be performed in November. So of our 232,020, turns out 14,000 of this is supposed to be unearned. It's kind of confusing that they use the same numbers, but that's okay. So what do we need to do to convert revenue to unearned? We're going to debit our consulting revenue and we're going to credit our unearned.
Be clear there on that one.
Yep.
The one that's being credited has to be off the line.
Oh yeah, sorry. I just made that mistake there, but yeah, you're right. The balance in the prepaid rent account represents 3 months of rent beginning September 1st, 2017. So currently in our prepaid rent, we have 27,000. Now that's for 3 months. So what is the monthly rent? 9,000. So that was from September 1st. Now it's October 31st. How much of the month? How many months of the 3 have we used? 2. So we need to convert 18,000 from prepaid to rent expense. And everybody understands why it's 18,000? Okay. I will tell you in the comments here. So we had a $27,000 balance in our prepaid rent. Right, you can find that in our trial balance. That 27,000, it says represents 3 months of rent. So if we were to divide it by 3, we would get 9,000 per month that we've prepaid. We've used 2 months. This is October 31st. That was from September 1st. So we've used 2 months. We get 18,000 that way. Accrued wages at October 31st totaled 6,800. So, what do we need to do? We have 6,800 of accrued wages.
Like the same we did before, like wages expenses to wages payable?
Yeah, we're going to debit our wages expense. We're going to credit our wages payable. That's right. The office furniture was purchased on March 1st at an estimated useful life of 2 years. After 2 years of use, it is expected that the furniture will be worthless. So we can find our office furniture right here. So, 84,000 is the purchase price. What is the residual value? How many useful years will it have?
2 years.
2 years. So we're looking at 48,000. 42,000, sorry, yeah. Per year. Now, what is that per month? What is it? 8,000. 35. So that was purchased on March 1st. It's now October 31st. So how many months has it been? March, April, May, June, July, August, September, October. 8 months. So what is that going to equal? 3,500 times 8?
They already like said in the 162 accumulated depreciation of is 28 by 28,000. Do we need to pass this entry off?
Let's take a look. So 30. So what is 3,500 times multiplied by 8? It's 28.
Yeah.
Yeah, it's exactly 28. 28,000.
That's already been paid.
Just like, yeah, 28,000.
Look at that. I guess we have no transaction required.
We're in the 2017 year.
We had to
They
put for
bought it the year
2017,
before.
that is 42,000.
Yeah, they got in 2016.
I see. Gotcha. Thank you. So that was the first year. That's it. I just wanted to show you how we got to year 1. So back to this number here, right? We don't need to do any of this. Good catch. I missed that year change. So 42,000 is the annual depreciation. So we can go ahead and enter that in.
Totally lost us there.
Okay. So the group noticed, and I missed it as I read through quickly, So this was purchased in 2016, March 1st. So it is now 2017. So the first month when we got to 28,000 was because we did our journal adjusting entry for 28,000 by getting the monthly total and multiplying it by 8 months. And then we see that we already have it here. So the second year, we have a full year of depreciation. So a full year of depreciation is 42,000 per year. So that's what ended up happening. So we can go ahead and do our depreciation expense for a full year. And just a little reminder to definitely double check the dates before you jump right into the question. So when we do our journal entry,
I was just wondering, how do you know that the residual value is always going to be at 0?
you don't, it tells us. So it told us that after 2 years of use, it is expected that the furniture will be worthless.
Okay.
It'll tell you what the residual value is, yeah. Accrued consulting revenue at year end totaling 4,200. So we had done the revenue, we've done the work, but we have yet to send them a bill. So we need to record our revenue, and we haven't, and we'll send them the bill. So we'll have an accounts receivable. And we're going to do consulting revenue because that's the name on the trial balance. Interest of $85 had accrued on the note receivable from the month of October. So here we have an interest receivable account and we have an interest income account. So we have interest of $85 accrued on the note receivable. Note receivable means we've given someone a loan, right? Note payable means we've taken a loan. So on October 31st, our interest and to record the interest from the note receivable. The balance in the prepaid insurance account represents the remaining balance of a 2-year policy purchased on April 1st, 2016. So, the insurance will end March 30th, 2018. And how many months remaining do we have from So we'll walk this through slowly. So we've got prepaid insurance account of 3,400. Now the last time we've done a adjusting entry was October 31st, 2016. We have not adjusted it since then, but we did do an adjusting entry on October 31st, 2016. So since November 1st, 2016, how many months remain in prepaid insurance until March 30th, 2016? So we have the year of 2017. We've got 2 months, so I'll do a little timeline here. So our last adjusting entry was purchased on April 1, 2016. In October 31st of 2016, it was adjusted and the balance became, we don't know what it was purchased for, but we know that the balance then became 3,400. And so if we have 2017, 2018, and March 31 or 30 in March? 31. 2018 is when it ends. So we know that this 3,400 will be the remainder of this term. So we've got 2 months here, 12 months here, 3 months here. So 17 months total. So we can go 3,400 divided by 17. It says 200 a month. And we are only doing 12 months, October 31st. Because this is where we're doing our adjustment, right here. So there's 2 months here. On the other side of that, this would be 10. So it's just 12 months. So we can multiply that by 12. And we'll see it's 2,400. So what are we going to do to bring our prepaid insurance down? We're going to debit
Insurance expenses.
and credit.
Prepaid insurance.
Yes, insurance expense. Finally, account of the supplies on October 31st revealed a balance of $620. So what do we have for supplies?
5,300.
So if we do a T-chart, just to help us here, we add 5,300, where the count reveals 620s remaining. So what do we need to do to supplies to get to that balance?
Outside supply expenses.
Yeah. So how much?
It's 4680.
Yes, we need to credit this 4680.
But
So
trial balance also is supply expenses.
yes, so we're going to debit our supplies expenses. We're going to credit our supplies. And it's for the amount of 4680.